Hi, I'm Kevin McPartland, and this is Behind the Market Structure. I'm here with Gaurav Arora, head of CIB Public Analytics today. Gaurav, thanks for spending some time with me.
Thank you for having me.
So much interesting going on in the market, such an interesting landscape for the world's global banks. Let's talk a little bit about primary markets today. That's been a real booming sector, yeah?
Yeah, primary markets have been fairly dormant over the last 3 to 4 years or so, but over the last about 3 to 4 quarters, we've really seen primary markets pick up. The last 2 quarters, including second quarter now, we do see banks reporting really big numbers in primary markets, and that's spread across M&A, ECM, and DCM, but it's really the M&A and ECM story which is driving the growth. The interesting piece is that the recovery on primary markets has actually been much more concentrated within specific sectors. So it might be uneven across the board. So banks which are more skewed towards those specific sectors have really benefited from that growth.
And I think we can guess, given the headlines, but what have been the hot sectors?
No surprises there. A big part of those sectors has really been around the tech, and within tech, it's really the AI-driven story which is driving the growth here. But then we've also seen a lot of activity in places like healthcare, and then again, something which is linked to what is going on in the world is around energy and power as well.
Sure. And is this focused on equities, fixed income, a little bit of everything?
It's a little bit of everything, but the interesting pieces have been, we've seen some really big deals come through in the M&A piece, which were really driven by the technology space here. But then when you look at the big ECM deals which have come to the market, again, which have been more around the likes of SpaceX, and now you've seen SK Hynix coming to the market, there's been a lot of capital raises done by the big tech providers here as well. So it's been across the board. So the activity levels are not just driven by the equity side of the story. You've really seen the big jumbo deals coming to the market, where you've seen some of the big players which have actually not come to the debt markets for a very long time, the likes of Alphabet and Amazon, actually coming to the market with some really, really big deals as well.
And is it only the largest banks that are winning through this surge, or is there more to it?
There is a little bit of a skew towards the fact that because you have the larger banks which have larger coverage of these tech names, as such, you've seen an inordinately high amount of the fee pool actually skewed towards the larger banks in the market here.
So is this setting everybody up with such a good year this year for a tougher year next year? I mean, I know we don't know the future, but what does that feel like from what you've seen in the past?
It is setting up a really, really high base for everything here. Having said that, there is enough demand in the market for this rally to potentially sustain for the rest of 2026. We do expect the amount of capital raises to actually continue for the rest of the year here as well. But we are seeing a little bit of a sobering story where some of the new issuances which are coming to the market is not giving a cold shoulder, but they're less enthusiastic about the longer tenor leg of some of the bonds which are coming to the market, which gives us some indication that the exuberance driven towards the whole AI rally is likely to taper off. It might not happen in 2026, but we do expect some sort of correction in early parts of 2027. We don't expect a downturn at this point of time. We are hoping for the best as well. But we do see some correction because there is a really high bar set in the market now.
Investors are happy now, but they're getting a little nervous longer term, effectively.
Absolutely. So, and I think investors are still excited about the shorter tenor of the market because they see that transparency. Anything which is beyond that shorter tenor, investors are getting a little bit more careful around those issues.
Any particular regions or parts of the world that are showing more growth than others right now?
think the growth story is really broadly split between the US market and then interestingly within the Asian markets as well. I think the primary space is really been driven by the US market, where we've seen some really, really big deals come to the market. Case in point, the SK Hynix listing, the ADR listing in the US market has been a pretty big deal. So I'm not going to talk about SpaceX because it's been talked about a lot. But the SK Hynix one was an interesting one because you had such a big Asian corporate driven by the AI demand, driven by the memory chip demand actually coming to the US market and raising anywhere between $28 to $29 billion. The fee pool was actually quite significant in this story as well. We had a fee pool of roughly about $250 million across the banks. And the interesting piece was that the fee pool was not just limited around the issuance and underwriting part of it. We also had banks which played a big role in post-issuance services, depository bank services, as well as cross-border execution services. So the fee pool actually gets a little bit more than just the traditional underwriting piece as well.
So it does effectively trickle down and around to all of the supporting businesses around that activity as well.
Absolutely. And then the banks which are more geared towards the fact that they are not just providing the legacy underwriting services here, but really giving a bear hug to the client and providing that end-to-end execution have really benefited from that ancillary revenues also flowing through.
Well, we've had such a boom already, and perhaps we still have OpenAI and Anthropic to come, which is only a few more $1 trillion to market.
It's going to be interesting because we have seen investor demand actually being quite strong on this one. The question which remains out there is how much appetite is there in the market to really absorb the scale of the next two here as well. SpaceX was a really big one, and now you've seen some of the other ones come into the market. As I said, at some point of time, we are dealing with finite capital here, so it remains to be seen of how much exuberance we will see for the remaining as well.
Well, let's hope we end up with a soft landing, as they call it, after all of this is said and done.
Absolutely.
Great. Well, thank you so much for being here.
No, thank you for having me.
Thanks, everybody, for listening. I'm Kevin McPartland.